Welcome to the Edge Market Update for the week ending January 19th, 2024. And we are seeing some geopolitical tensions rise again in the Middle East. Grain shipments in the Red Sea continue to come under attack. And if the attacks continue, we may see some more escalation that affects grain markets. Crude oil is trying to bottom on this news. The Biden administration has said previously they were going to, pretty much put in a price floor on the strategic oil reserve at $70. That's when they were going to refill their reserve. So crude oil futures haven't been under $70 or spent much time under $70. And we are building support above there and are trying to break out a little bit. We almost closed at $74 today, and which is close to the 50-day moving average. So if we trend higher into next week, we easily could see high 70, low 80 crude oil at some point. So it may be time to consider talking to your fuel man for farm diesel needs in the springtime. Brazilian crop estimates, the private ones are suggesting the crop is much smaller than the current USDA estimates that were updated in last week's January WASDE report. So that would be a bullish tailwind if that is true to soybean and corn prices too, if we do have smaller actual yields than what were estimated. So prices didn't respond much to the news this week. I know Brazil is starting to harvest their soybean crops, so we will see if the actual yield data is starting to come in smaller than they originally expected. But as we move on here, we'll go over the old crop corn chart for the March 24 contract, and we close the week at $4.45 per bushel. We did put in a new low yesterday at $4.36, a new low for the week, but we did recover nicely and actually traded higher today too. We tried to get above the 9-day moving average at $4.50, but were met there with short-term resistance. We did have some good buying volume the past couple of days, which is good to see. Strength indicators, we still are very oversold in the short term and the long term, but potentially have the opportunity to break out of some negative trend back from late December if we get some positive price action next week. Money flows have been oversold for quite some time. We are above that lower reading there, which could potentially be a buy signal on one of these indicators, but long-term momentum remains very negative. And I'll be going over the weekly charts here very soon on corn, but just in the long term, extremely negative trend on corn, but hopefully can start forming a bottom here. It's nice that we spent some time basing this week in a range, spending time building a support level, but really for any bullish move higher here, we need to recover $4.50, which is a 9-day moving average next week. And then the big level moving forward is at $4.61 level. And that is not only the bottom of this, what was failed trend line support all the way back from August, but there's also the 20-day moving average there that will be heavy resistance as well. So price really needs to close above there to have any chance at seeing a continuous move higher from there. Also is 474, which is a 50-day moving average. That will be big resistance as well. So if we get there and you need some short-term cash flow needs for expenses, that might be a time where it might be a better time to liquidate some grain for that purpose. New crop sales, still have a long time yet. I would still be patient on those. But moving forward to the soybean contract in the March, we closed the week at $12.13. Also, we did make a new low yesterday at $12.01 a bushel. Did recover nicely. We reversed higher. This morning, we also traded higher all the way up to about $12.25 a bushel, but were met at resistance at the 9-day moving average of $12.27, and we fell back to where essentially we closed yesterday. But didn't have as much bullish volume on soybeans. We still remain in a downtrend here on strength indicators. We're extremely oversold here, so a bounce at any time could be warranted, especially if there's news that could cause managed money to cover their short positions and have to go long. But money flows, again, remain extremely oversold, and the momentum of this market also remains quite a ways under the neutral line. So, really, again, same thing with corn. If you have old crop to sell and you can be patient, that's probably better. But if you need to make some sales to generate some cash flow soon, really, if we could recover this 1227 level next week, that would open up the door to get back around the 1260 area. The 20-day moving average is sitting at 1264. So if we got there and you needed some cash flow needs, right there would be a good resistance level to potentially take some profits and generate some revenue for your expenses on your farm. But I want to go quickly over the weekly charts, and I apologize last week. I had some audio issues on the recording, but again, wanted to go over it this week. But we remain extremely oversold in the long term, probably the most oversold all the way back to the early first or second quarter in 2020 when corn was trading for just above $3 a bushel. If we look back at these weekly strength indicators, we are down at this bottom range here, and we are very oversold. That was the biggest oversold level since April of 2020. And then before then we have, back in 2014 when corn was also trading for $3.18, and late 2013 when corn was trading in the low $4 range. So in the long range, we are very oversold. Same thing with momentum indicators. We're very much so under the neutral line here. And the last time we were this low was also in 2014 when prices were trading between $3.18 and $4.17 a bushel. So that's corn. Soybeans aren't quite as bad on a longer term range, but if you look back to 2020 when the inflationary period started, we're back at that bottom of that 4-year range almost. They got down to about $11.80, but really around $12. We're at the bottom of this 4-year range. So hopefully we don't break below this level, or else we could really put this 4-year cycle that we're in jeopardy. But strength indicators are very weak, the most oversold since earlier this year. Before then, back in 2022, and then momentum, we're also below the neutral line on a weekly level. So the trend longer term on these soybeans are weaker, the most oversold since back in 2019 when we were trading back at $9 a bushel roughly on soybeans. So one thing I'll say is I would just try to remain patient and positive. We're going to get a rally at some point. It always happens, and at that point we just have to be ready to react. This year will be the year to have targets in mind on where you want to sell your grain at profitable levels. When we get there, it's probably a good thing that you have some targets in, and just instead of trying to hit the home run this year, better to hit singles and doubles and continue to operate an efficient farm business by making profitable grain sales. But with that being said, we will be at the Midwest Ag Expo next week, Wednesday and Thursday in booth 410 at Gordyville. If you want to stop by, free lunch on us. Would love to see you guys there and get caught up. But with that being said, thank you for watching this week, and hope you guys have a great weekend.